Hey guys, AKIL'S here. Welcome back to another episode of the Trading Edge video, your weekend look or your weekly look around the markets. Last week we did a phenomenal job of nailing our prediction, so I was thinking instead of coming back and giving you more ideas this week, I was just gonna sit back and bask in my glory. But then I figured that wouldn't be helpful to you guys as traders, so we're gonna look at a handful of more. Now, before we kick off this week, two things. One, what to be aware of. So if you guys remember, last week we had a lot of monetary stuff happening in the markets. We have the Bank of England and the FOMC speaking again this week as well, so the markets are paying attention to that. Two, the markets are still paying attention to the whole tariff thing and trade war that we've been going through since January. And three, the markets are concerned about a new war, not a trade war, but a new actual war in the sense of the U.S. joining the Israel-Iran thing and President Trump saying, you have 2 weeks to decide on something or we're going to involve ourselves maybe. No doubt the market will be paying a lot of attention to that, and no doubt an actual war is something that would move the market. Obviously, it depends on how things go, but there is an effect, or there will be more of an effect on oil. We're seeing a little bit, but nothing too major right now. We would see a big effect on oil. We would also see a big effect for the US dollar, probably a boost unless things go sideways. So just keep that in the back of your mind. Now, before we hop into the charts, because I do have a lot to show you, some things we're going to spend a lot of time on, some things we're going to go through pretty quickly. I was talking to a trader today, one of the traders that I work with on the Tier 1 trading platform, and he was telling me about his success and how great I am, and thank you, and I know, I'm amazing. But he brought up a really good practice that he does, and he says he makes the London room live. He does not make the New York live room live, which is the one I run, but what he does is every day he goes back through the entire session and he pauses it each time we get to a new pair. He goes onto his chart, he tries to make the prediction beforehand and then see if I'm seeing the same thing. And I said, hey, that's a great idea. So for you guys that have been following this video for a very long time, take it to the next level. Just don't use this as trading ideas. Just don't use this as education. If you guys remember the podcast where we talked about the hierarchy of learning and when you practice, right, practical application, you retain more information. Try it out yourself. Each time I go to a pair, pause the tape, analyze the market on your own chart, see if you can guess what I'm going to talk about, mark up your charts, unpause it, and then see how it plays out. And if I don't see what you don't see, it doesn't mean it's wrong. We could be completely different traders, but it's just a fun little game to kind of bring more energy to this video. So let's hop in. We're going to start here on the euro yen, and we're going to do big picture. I apologize for the side view here. I have the camera in a different place because this is my good side, right? But it could be kind of weird if you're staring into my ear hole the entire time, so just ignore that. But the weekly of the euro yen, we have passed a very important level, right? This red box here, this level, was one that we've been eyeing up forever, it seems like, and price has been consolidating and whatnot. But we finally got past it. You'll see that more clearly on the daily, right? We can look left, structure these clues. I'll move this blue line up to these new highs right here. Boom. And you can see that we indeed closed the week, closed the day with a break and close above that level. Now, why is this important? Well, because I follow a strict 4-step process when it comes to my trading. IPDE. It is my flow chart, it is my checklist, it is my video game progressing to the next level. It's the thing that runs my trading. I follow it, right? And based on what I identify, it allows me to make a certain prediction. So in this case, identifying the break above, close above structure allows me to predict that price is likely to go higher. And that sets up my directional bias. Now I'm thinking long. So now instead of being confused or not knowing what price is going to do or what direction I should be in, because that's something that happens to a lot of traders, that should I be long, should I be short, I don't know. I have a clear directional bias, and now I can go through my rules of engagement to decide how I want to get involved. So in this case right here, the higher high, higher close allows me to predict that we're likely to go higher. The next question I want to ask myself is, AKIL, if we're likely to go higher, and yes, I do talk to myself, trading is a lonely sport, right? So it's okay. If any of you guys comment below if you talk to yourself as well. I'm going to feel really weird if no one comments. I know it's not just me, right? Is it Akil? No, it can't just be you, Akil. See, I'm doing it again. Okay. If we're likely to go higher, then where are we likely to go higher to? And the next level of structure that stands out to me is going to be right up here. This zone between 170 even, nice psychological number there, and about 170, let's call it 172 even, another nice psychological number. And what this tells me is that there is room for me to make the money, potentially. Hold on. Guys, all right, look. You can't be in here. You guys have to keep it down. Okay? All right, I'm sure I edited that out. The neighbor kid came over, they're playing soccer in the living room. It got wild. One busted loose and almost made his way into the office, and I had to go tackle him there and whatnot. But it's cool. He's been handled. Probably shouldn't have admitted to that on air. But where was I? We have the room to potentially move from where we're currently at right here, right? We closed at about 168.25s up to the low of this level. Even the first part of it, the 170 even handle, is about 175 pips away or so. Now, my personal way of taking a trade, or if you're a breakout trader, have at it, get involved right away. Just, make sure it's part of your plan. I'm a pullback trader. So what I'm looking for is a pullback, right? A little bit of relief, price action to give us a little bit of this, and then look to catch that next extension up. And as we go down to the lower time frame, a 4 hour, we'll get a clearer view of this, right? You can see price action has broken up. We have a previous level of structure. What line do I want? Here we go. Right here as well. We have our RSI, our relative strength index, overbought, which means we're likely to see some type of relief soon, right? So again, as soon as we get this relief, boom, this relief can occur anywhere between here and here. I'm going to look to trade that pullback bullishly and hopefully ride it up to the next level. So this is one of the, well, I'm not going to say anything. I was going to say this is one of the, I'm going to say it. I don't care. This is one of the top trading ideas that is on my radar for this week. And saying that, I hope I didn't jinx it. But I think it's a good one. Something else to pay attention to as well. I don't talk about this too often, but we hear the word harmonic a lot, and we tend to just think harmonic patterns, your Gartley's, your cipher, or not cipher, well, cipher, yeah, Gartley's, ciphers, bats, butterflies, sharks, crabs, stuff like that. But harmonic movement isn't just advanced pattern formations. Harmonic movement is, if you're a musician, it's the ebb and the flow, the smoothness of something. And another type of harmonic move is this. It's an AB equals CD pattern, equal length move, where you have one extension right there. If I were to copy and paste it, and these things aren't always exact, but you can see if I were to copy and paste this, we have a move of almost the equal length. We may continue to move up to that direction as well. Now, something that we often don't talk about, we always talk about I'll draw this on real quick. We always talk about the A, the B. Yeah, that's horrible. Gosh. Maybe. Yeah, the A to B, the C, and the D, right? And the AB equaling the CD. I'm struggling, guys. I'm sorry. There we go. But what also sometimes moves harmonically is the retracement. So if you're someone that wants to predict where this pullback may occur to so that you can get involved, look for an equal measured retracement as well. And again, you have to wait till this D leg completes to know where it's at. But draw in an equal retracement and then look at the length or the Fibonacci ratio of the retracement as well. So if I take my Fibonacci retracement tool, and I'm sorry for getting more complicated. I was supposed to stop myself at just to pull back and move on, but I'm a trading nerd and I get into the zone sometimes. You can see that we came right into a 50% retracement. If we're going to see a harmonic move, this may come to a 50% retracement as well, again, depending on where this ends. But just keep that in mind to add a little extra flavor to your trading idea. Now, next up is the dollar yen, and full disclosure, this isn't really a new trading idea. I just want to brag a little bit. It was a good trade that I had to end the week, and I want to share it with you because I haven't had a chance to share it with anyone else. But for you guys that were in the live room, if you remember Thursday, right, we were looking at this potential situation, right? This is very similar to what I just showed you. So yeah, there's the educational bit. This is what the previous trade may end up looking like. But what we had here, and I'll erase the notes and do this fresh, was we had a break and close above a previous level of structure. and we were looking for a retest, a pullback, and an extension forward. Well, I'll show you guys where I got involved right here. Nice little 3-bar reversals, right? You guys know one of my favorite entries where we have our high momentum bearish candle. We have our showing lots of bearish strength to the downside. We have our indecision candle right here, that doji showing, oh, maybe we don't want to push it as low, or maybe the bulls want to fight it up, right? Little indecision. And then we have our higher high, higher close next to it, which is my reason for entry. But what makes this a little bit special is this is where I used that Fibonacci inversion technique that I shared with you at some point here on the YouTube video. Because we had an awkward little double top, non-double top thing before we retraced, right? We went here and then we kind of retraced and then we failed to extend and then we retraced again. And this is where that Fibonacci inversion technique comes in handy. Again, you can YouTube search the video for that. It's on here if you want me to walk it out in more details. But essentially, the two things that I'm doing is this. One, I'm taking my Fibonacci extension tool from this high to this low backwards, right? That's the crazy part. And then looking for that 1618. And then I'm taking my Fibonacci retracement and I'm dragging it from our previous swing low right here to that swing high right there. And I'm looking for that 618. So the golden mean and the inverse golden mean lining up together right at a level of structure. And that is the Fibonacci inversion trade in brief. So that was really cool confluence that we had at this level to trade it up. And then the market took off and did the thing. As you saw noted before, there's also a bat pattern here, which I am now in as well. A little bit to the negative, but let's draw that in as well. So this is a stop and reverse, which is also something we talked about on the channel. Man, we're just talking about too many cool things on the channel. Man, if you're not subscribed, you probably should be subscribed so you don't miss all the cool things we've been talking about, especially if you're someone that's new and this doesn't make sense, right? Go search the terms I'm using and you will find a video on it. I promise. If there's not one, I'll do one. But X to A to B, B to C, C to D right here. Right, little stop and reverse action, floating in the negative right now so far of the bat pattern, but we know that the bat pattern completion zone is between that 886 and between the highs right here. So it is still valid. No need to get scared and freak out if you're in it. And if you're not in it, still an opportunity to get in it if it meets your rules. Next up is the Loonie Dollar Canada, and another one that we had a very, very nice short on a few weeks ago. And we have a nice little shift right here. So this was the zone that we were looking for our shorts. There are two different trades, but this was the zone. One was at the top of the zone, one was in the middle of the zone. Price action has come down into that zone and has given us a very bullish week, right? Pretty much not quite engulfing, but I didn't check. I don't really care, to be honest with you, but let's just check since I'm here. Close 137.31, high 137.20. Okay, yeah, so we did actually engulf this the previous week. So yeah, even more of a positive sign here. But what matters mostly is that we're seeing a reaction at that level. Now, keep that in mind as we go down to our lower time frames and we start to see this little shift, this little rotation in price action. Here's what I mean. If I'm drawing out my ebbs and flows, right, we see the market goes down, it goes up, it goes down, kind of holds structured, and we finally break that. We retrace all these times, right? We do this little dance right here. You guys should know what this pattern is, right? This is that falling channel, right? Equipped with divergence, good sign of relief. And then we put in this rotation, right? We've came here. We've failed to pull back. We've come up here, right? And then we've done this little double top thing. Now, what I want to see is this. This isn't enough for me to want to get long, but if we can take out these highs, right? Because by taking out these highs, we also, we look left, structure leaves clues. We also take out these highs. There's supposed to be an arrow that got drawn in there. Ha, these highs right here. If we can take out those highs, I would expect price action to continue higher. At minimum, this zone right here, honestly, I would expect us to retest these highs right up here around 138.5, right? 138.50. So kind of very similar to what we spoke about in the last few opportunities. If you guys are new to the channel, my trading is pretty boring. I look for key levels of structure. I either trade counter trend at structure or wait for levels of structure to be violated, then trade continuation. That is, aside from advanced pattern formations, that is pretty much it. I'm sorry. There's all types of cool fancy things that happen inside of there with all these classic pattern formations, head and shoulders and pennants and rising and falling channels. But at the end of the day, it's just structure. So if you're looking to get wowed by some new shiny thing on YouTube, this is not the place. This is why I don't have the millions and millions of views. Although we are getting close to those goals I shared with you, especially that 55,000 subscriber goal, which I think we will hit by the time this video airs. Anyway, so same opportunity here, looking for a break and close above. Would love to see a pullback and a chance to hop on to a higher level. Next up is the Aussie dollar. Not going to go into a lot of detail here, but looking for the same thing here. We are at a decision point, right? You can see this magical white line. This is a previous level of structure support. Although it is lower than this level looking left right here, we did not break and close below that level. So that means two things. I'm holding it one finger, but I meant to do two. Two things. One, if we can get a sign of a hold at this level, so for example, let's say a double bottom, for example, right? Price comes up, it comes back down, boom, like that. That is a good opportunity to buy, boom. However, if we violate this level, right, and you guys should notice now, then we should wait for a pullback, right? And then look for a chance to trade it down. So this is a cool thing, right? I always say we want to be predictive in our analysis, reactive in our execution. And what I mean by that is that at this moment in time, right, especially with the market being closed, I can't trade. The markets aren't moving. So what I'm doing is I'm setting up my trades for the next week. So someone asked me a question about what do I do during my weekend analysis, and I said the same thing I do on my day-to-day analysis, but this is a little bit easier because it's the only time where the markets are closed. And I'm basically writing down in two columns, okay, if we hold structure, then look for this. If we get this, then longs. My other column, if we violate structure, break and close below, baka, right? Weird, but if you're on the platform, you know what I'm talking about. Then look for pullback and a chance to get short. So I have my long and my short opportunities already laid out, right? There's no thinking, there's no emotion, no heart pumping, no jittery fingers, no sweating of the brow, right? I'm just waiting for the market to tell me. I've already made my predictions, right? Now I just need to react. So once the market tells me what the hell it wants to do, then I can get busy. And it just makes trading so much simpler when you have that rules-based approach. I don't want to say I don't understand, because I was that trader that was just blindly throwing money at the charts. And since I've made the change, it's embarrassing to think that I used to be that way, because this way is so simple. It's work on the front end, but all that work on the front end makes the trading easy. I was reading this book for my kid on soccer, and I'll make this really, really quick because I know you don't care about this personal stuff, but in the book, the coach was training his team like to play soccer. They were practicing on the beach in sand, and all of them were slow, and it was heavy, and they couldn't kick the ball. Then they had another practice like a week later on regular grass, and they all felt like faster. And they're like, that's what coach was doing. He was making everything harder now so that when it's actually game time, it's easier. And that's what this is. We're putting in a lot of work. I mean, we can take that deeper to back testing and strategy development, right? But we're putting in a lot of work on the front end. That way we make the actual trading thing as easy as possible. When we make the trading thing as easy as possible, that's how we're more comfortable and confident in the market instead of giving in to those emotions. So it all comes back to psychology, right? So cool opportunity there. I said I would make it short and quick. I didn't, because I lied. All right, Aussie Canada next. I'm supposed to be doing a thing where I don't show you analysis and you guess what I'm looking at, so I apologize. This one will be short and quick. It's a cipher. It's still on my chart from this week in the live room. Nothing has changed. It's getting down to the zone, that red box. You can see price has, it's wiggled its way down a little bit lazily since we initially made the prediction. But nonetheless, this is still a valid pattern. And if it gets to that zone, I will be long. Done. Euro Aussie is next. This is a really interesting one because we have come to the highs of a previous zone of structure. Sorry, I got news flashing on my left-hand side here. We've had a high momentum candle coming up, and I showed you a trading entry before on a dollar yen where we had this 3-bar reversal. there is the potential for one here as well if we get a lower low, lower close. So if you're trading here on the 4 hour, that could be a short. I have a feeling it's going to be hard to get a good risk reward because target wise, I would only expect that price action comes back to this level right here. If anything, maybe if we want to isolate it, this level right here, 77 halves, 177 halves, 177.50, excuse me. But when we go into hourly, that may open up more room. And I'll actually show you let's talk about this real quick. So I want to measure this off on a 4 hour chart. And this is some of the importance of going down to a lower time frame if you're able to. If I'm setting up a trade here, right, my stop loss is going to be, what is this, 178.80 plus 50, 179.30. Math is fun, right? My stop loss is going to be right about here. If my target is right here, right, because I'm conservative and whatnot, if I want to maintain a one-to-one risk reward, and what I'm doing is I'm taking my Fibonacci retracement, measuring it from my stop to my target, and that magic 50% level right here, that will tell me that if I get an entry above this level, I will have at least a one-to-one risk reward. You can clearly see that the 50% is above the doji candle. If I require a lower low, lower close, then that can't complete above the doji candle, meaning there's no way I can get involved in this trade. Unless I'm able to go down to a lower time frame, right? We go down to the hourly, right? We still didn't get the lower low, lower close. Dang it, that's what I was looking for my entry. Don't worry. This is why we have secondary entries. Perhaps we get a double top, right? Perhaps the price action does a little bit of this, and then we come back up to retest and we hold at structure. That's going to shift things around, right? I'm going to shift my stop a little bit because we're on a lower time frame. So my ATR is changed. My ATR is no longer 50. It is 25. So half C's, that puts us at what, 178.80. Ooh, that's going to put us at 179.05, right above that psychological number. You can tell how nerdy I am with psychological numbers. When I go, ooh, above the psychological level, I get all excited about that stuff, right? That's going to put us right here. Our target isn't going to change. It's going to be right here. All of a sudden, now to maintain at least a one-to-one, all I need is an entry above this white line right here, which is going to be a lot easier to get. In fact, the likelihood, and I say the likelihood like I know where a double top would complete. I don't, but if I had to guess, I would say that the double top would complete somewhere, let's just put it right here, and you can just see the beautiful risk reward that we can get to our initial targets down here, about a 1.5 to 1. So good opportunity here on Euro Aussie, but a good lesson. I told you guys to give you lessons, right? A good lesson on using a lower time frame entry to involve yourself on a trade that perhaps you identified on a higher time frame. Now, lastly, here on the Euro New Zealand, we're going to combine the last idea that I had with the previous ideas because this one you actually have both setting up, especially depending on what you have as your higher time frame. So let's start off as someone from the daily, right? If you're on the daily chart, you're looking at this and you are seeing a hold of the highs here, right? Look at this kind of sideways drifting lower channel. You can see that price action recently approached those highs. We held those highs. So we're seeing a hold of those highs. And we're seeing the same thing we saw on, what was it, the Euro Aussie, whatever we looked at, where we can look for this kind of move here, maybe a double top there, and then a move back down to this shelf right here. This is what, 192.36 is where I would expect price to go. On the other hand, if you're someone that's using the 4 hour as your higher time frame, so the time frame in which you identify and predict, well, you have a higher high, higher close above that level. So maybe you're thinking trend continuation. Now, the analysis, this is the cool part about technical analysis. There's no bullish analysis, there's no bearish analysis. It's just analysis, and then you figure out how the hell you want to use it. The analysis is going to be exactly the same because where are you looking for? So if you're looking for a short opportunity, the double top, you're predicting where is price likely to go to if we go short, because that's where I want to take targets and get out of the trade at, and that's going to be this level right here. If you are someone that is looking for the trend continuation, you are saying, okay, well, I'm waiting for the pullback and looking for a chance to get long. So where are we going to pull back to? Well, look left, structure leaves clues. It's going to be this same level, right? So you're doing the same analysis. The only difference is that this level for the short trader is where they're looking to cash out, get out. This level for the long trader is where they're looking to get in. And it represents a really cool, I guess, example of the balance of the market, right? Because you have the sellers who are selling from here. And if you want to get out of your sell position, you have to buy out of your sell position to take your targets. Well, this is where the other group of buyers are interested and you're looking for momentum to push it up. Well, why does the market pull back and go up? Well, because now you have previous sellers that are now buyers. You have new buyers that are new buyers. And if you know the rules of supply and demand, right, the rate of buying pressure is outweighing the weight of selling pressure and things go up. Boom, that is how the market moves. You're welcome. Before you go, really important, if you watch the channel for any time now, you know I've been doing this promotion for easy trading computers where I show you the thing right here. You can sign up and get your free trading computer builders or buyers guide. I've used it twice in my career and I'm very, very happy. Even if you're not someone that needs computer built for you, it's good to learn about that information and what a trading computer should include. Cool news is I just did a podcast interview this past week with Eddie Z and we talked about a lot of different things. We got a little bit nerdy with some Wall Street talk and some trading talk, but it's a brilliant conversation. You won't even realize it's a Q&A. It's kind of just like two traders kicking it. So if you get a chance, check it out. It's about 45, 50 minutes, so it is a good chunk of your time, but there's a lot of knowledge. You think I have a lot of experience in the market? Eddie was back there trading on Wall Street, so he's been through the changes and can tell you some really cool insight about how things are now compared to how they were before. So trust me, you don't want to miss it. I'll put a link in the description box below. Thank you guys for enjoying the video, and I'll see you next week if I don't put up another video during the week. Yeah.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on. This is